In this video, I'm going to show you my very first paper trade grade, Gem Mint 10 Perfect Trade. I want to show you how that trade breaks down so we could have the mindset of what makes a great selling premium trade. I'm also going to show you my March 2020 numbers. A lot of people ask me via email, how'd you do in March 2020? Did you make any money? Well, if you've been a part of the channel, you know I did. But I'm going to break down each trade and give you a little commentary to how those trades played out, because I did take some hits, there's no doubt. But we battled. We did not sit on our hands, and we ended up making some money. I want to show you those trades. I'm back in Bend, taking a little vacation, man. I love downtown Bend. Look at this. Look at this. The Deschutes River. Bought a house here 2 years ago, looking to buy another. Love me some Bend. Hey, look, stick around. I know you're going to like this one. Hey, welcome back everyone. It is time for another red hot covered call video. Well, hey, look, today I got a treat for you. I'm going to show you my very first one of one paper trade grade Gem Mint 10 trade I just graded for somebody. This trade actually made me sit back and admire the trade. It's a cash secure put. I'm going to show it to you here. We're going to talk about why it's damn near the most perfect trade. And it was only 3 days long. So I'm going to show you where the stock's trading now. And I'll tell you what, I think you're going to agree with me. The paper trade grade is fun for me and my premium members because we get ideas. You know, so many people out there are sitting there with ideas. They just want to run it across somebody that has traded a lot, like myself, has had success like myself. So what I did was I created the paper trade grade, the web submit form, where members can actually submit trades, and I'll break it down for them. I'm going to show you that here. I'm also going to show you my March 2020. You know, I've been trying to get my year in review video done. I just have so many spinning plates right now. I'm just not going to be able to get the year in review video done this week, but I still want to come back and show you how my 2020 played out. I ended up making more money in 2020 than I have in any other year, and I absolutely love sharing with you that journey. So I want you to stick around because that video might be coming next week. But what I'm going to do in this video is show you my March 2020. I get this email all the time, and I've been getting it more frequently in my email, where people will email me saying, hey John, I really want a little deeper dive into your subscription before I sign up. How did you do in March 2020? And of course we know what they're really asking, right? How did you do in one of the worst months in modern history? You know, here you are charging for a membership. Well, how did Mr. Membership Guy do? Well, I'm going to show you how I did. I'm going to be transparent in this video. I'm going to show you my total income tracker. So let's go ahead and get to this. If you like anything you hear today and you want to be a part of it, all you have to do is subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now what I'm doing is offering you one free month right there. All you have to do is go to my website, cptdashboard.com, click Upgraded Dashboard, and get your one free month offer. That's my most popular one, and I'll tell you what, it is the best offer because you get one free month. So why don't you go ahead and check it out. It's already dirt cheap. Would love to welcome you aboard. Now let's go ahead and look at that paper trade grade for which I gave it a Gem Mint 10 perfect trade and see if you agree. Now, if you did not know, being a member, you can submit me trades and I'll give you the What Does John Think review. And what I love to do is to take your trade, plug it into all of my spreadsheet templates, and give you some commentary. Because I know you're sitting there and you're on the fence. You think it's a good trade. You're not really sure. You're a little apprehensive. What would John think? A guy that has traded some 1,000 trades over the past 4.5, 5 years. And quite frankly, I've been rather successful. Well, that's what I like to do. Just give you that second set of eyes. And I'll tell you, man, it is one of my favorite things to do because I get ideas and I share them with the members. This is about a like-minded community sharing great trades with others. Now let's go ahead and look at what I deem to be the perfect selling premium trade. Now it's on Kroger, okay? So right off the bat, when we're looking at selling premium, we're going to risk money or we're going to buy the stock. We have to want to own the stock because we're either going to buy it or do a cash secure put where we could be assigned the shares. We want to use S&P type companies. Those are great companies, right? You want to be invested in great companies. Now, this paper trade grade is on Kroger. Kroger being one of the biggest grocery store chains on the planet. Well, that right there meets golden rule number 1, great company. Golden rule number 2 is we want to look at the charts, right? We always want to look at the charts. What is the chart telling us? And as I explain here below, we find that Kroger rallied off of support and it broke through resistance, traded above resistance 3 days, then peeled back and it bounced off of resistance, or what is now, quote unquote, the new support, and it's now heading higher. I don't know if you could see this, but see this red line right here? That's resistance. That's resistance. And you see where Kroger rallies to resistance, it breaks through, it stays above for more than 3 days. When it peels back, right, it now is going to use that as the new support line. And sure enough, that's what it did. And as you can see, it moved higher off of that support. So if we're drawing a line of support, that is Kroger's new support line in the short term. So knowing this member went ahead and said, John, Kroger did not experience a nosedive back in March like so many other stocks. Decent premium, nice stock to own. So without giving me any information outside of that, I know this person values a great S&P type company like Kroger, so he wouldn't mind owning the stock. He notices that the premiums are really good with Kroger. Now, Kroger is one of those less volatile stocks, so the reality is you're not going to get great premiums. But, for a 30-day safe trade, it does pay that 3%. So I already like the setup here. The chart is really telling us Kroger is looking to move higher. Now the trade is for 3 days. So this is going to be a cash secure put, meaning he's going to put up the money to buy somebody's shares at a strike price. And he picked the expiration being this Friday. So he's only doing this for 3 days. So because there's no news events, same store sales reports, there's no earnings reports, there's no ex-dividend date, there's no real news events that gets in the way of Kroger trading sideways to higher in this sideways to higher trading stock market. And with the chart showing us that Kroger is now more likely to move higher than lower, selling a cash secure put right here where it's trading is pretty safe that he gets assigned the shares at the money, or the stock goes higher. He keeps his money, is not assigned the shares, but he keeps the premium. And when we look at the premium for this trade, this 3-day cash secure put is paying him 1.47%. 3 days. The stock was trading at 31.76, so he does the in the money 32 strike. So he doesn't mind owning the shares, and if Kroger were to trade sideways to lower, because it's 3 days, it's probably going to finish below 32, and he's going to be assigned the shares. And then I'm guessing he's going to write covered calls. But here's the deal. 3 days, 1.47%, no events, S&P type company like Kroger, this is setting up to be an awesome cash secure put. Now on 200 shares, he would be knocking down an option credit of $94. Okay, so this fits that small ball account. If you're out there, you got a small account, $5,000, $10,000. Kroger is a great company to use for selling premium. You can buy the shares and write a covered call. You can use the cash to then sell cash secure puts and get decent premium. So if you're out there on the fence wondering, with a small ball account, can you sell premium? Well, of course you can. This member right here is doing it. Now, as we scroll down, I give you more commentary about the trade, right? What am I thinking? What would John do? Well, looking at the downside protection, and remember, Kroger has found new support. If we dial in, support is around 31x. So what I love about that is our downside is now 31.29. So even if this stock starts to peel back and we get some profit takers and Wall Street starts to sell it, well, we know that if the new support line holds, Kroger's support line is around 31. So having the downside protection of about 1.48% puts us right where we want to be. If the stock starts to peel off, well, we're right there holding the stock real value, and I like that. Now, with all of my paper trade grades, we talk about things like how this person can manage this trade. I give some insights on how I would manage it, but really what I'm saying is how you would manage it. Obviously, all members can email me. They can say, hey, John, you did a paper grade trade on my stock, and now I'm in a spot. What do you think? And of course, I'll answer you, give you some ideas. Now, let me give you a recap of the Gem Mint 10 of 10 paper trade grade. I absolutely love it. Because it's only 3 days, we have no earnings reports, we have no X dates, we have no events to worry, that we have extra volatility to the stock. And again, that's key to getting a Gem Mint 10 grade here, okay? The stock has broken through its true resistance and it's going higher. Absolutely love that, because if we're assigned the shares, we have that downside protection of about 31x. Well, the new support is around 31. Even if we are assigned the shares, we can feel comfortable with the premium we collected being a part of our cost basis reduction. We're basically getting the shares. Now, that's if the stock were to fall. I'm going to show you here in the charts how that did not happen. Now, with that said, he could take this stock, and because earnings isn't until March, he has an entire month. If he were assigned the shares, he has the entire month to write a 30-day covered call, because he won't have any earnings to worry about, and he won't have any X date to worry about, right? X dividend date usually adds a little more volatility, because some people might want to come in and take your shares from you if you wrote a covered call, because they want to collect that dividend. Okay, they want to be the shareholders, so they collect the dividend. So not only did this member submit a great cash secure put, this is setting them up for an even better covered call. So this one gets my first Gem Mint 10 of 10 since I've been doing it. Now, real quick, I wanted to show you this. Since sending that member that paper trade grade, look what's happened. Kroger has actually moved higher. It's now trading for $33.14. Tomorrow's the expiration. Remember, they went ahead and sold the 32. They put up $32 a share. They received 1.47% premium. They may not end up getting the shares after all. This is going to be a great 1.47% cash on cash in just 3 days. Trust me, if you can do that more than a couple times, you are absolutely killing the market. Look, I give you 1 free month. If any of that interests you, go to cptdashboard.com, click Upgraded CPT Dashboard, and if any of that interests you, would love to welcome you aboard. Okay, so if you've been a part of my channel, you know I love showing you my total income tracker. Now, this tracks every single trade that I do, and it tracks it as a one-line item. So what do I mean by that? Because what I want to do is sort of clarify this so I don't confuse you. With my total income tracker, you're going to place a trade on a single line of the spreadsheet. Now, if you buy the stock, you're going to place that trade on the line, put a cost basis, and when you sell the stock, you're going to put in the closing price, and you're going to move it from the active trades down to the closed trades. I'm going to show you that here in a minute. But do understand, I do not spin multiple plates and have multiple pieces of paper trying to figure out how I come up with these numbers. It is literally one trade, one line, and when the trade's done, it gets logged and it gets booked. That's what I'm able to do with my total income tracker. And that's why I've always said the trade never ends for me until I sell the shares. I get that question all the time. John, you bought DraftKings and you made a $1,000 premium, but now DraftKings has fallen $4,000 and you're not making $1,500. So how are you saying you're making $1,500 yet you're down $4,000 on the stock? I haven't sold the shares yet. So until I sell the shares, that's when we book it as a win or a loss. Remember, everything in between me buying the shares and selling the shares is me playing the game. So what you see here are one-line items. I book the trade, we move it, we do it again. So this is my tracker. This is my total tracker for the year. This is 2020. It tracks every single month of the year. And in March, if you remember, March was the month where we wake up and the stock market falls some 50%. And by the way, that is an absolute crash, because not only did you have the stock market falling 50%, you had fear at the bottom. I knew there was short-term fear, there was hella selling, but this too will pass. So with that said, when March happened, I continued trading. I didn't sit on my hands like most people did. So as we started 2020, January, I had a $9,500 month, man. It's just a continuation from last year. February was $5,400. Man, I am knocking it down. Then comes the most disastrous month in modern history when we're talking the stock. 50% on the Dow, right? Do you remember the Dow was trading damn near 30,000 and it fell to some 15,000, okay? So you have to understand where we were March of 2020. So I ended up making, when all of the dust settled, I ended up making $1,549. I'm going to show you the trades right now, but do understand, I did not lose money. So let's go ahead and take a look at all of my trades in the month of March 2020. Okay, so here are the closed trades of March. Okay, so do understand, when I close a trade, I move it to the month for which it was traded. Okay, if I place a trade in February, that money does not get booked until it closes. So if I place the trade in February and it closed in March, I book it in March. That red column you see right here in the middle, it's red, but that doesn't mean I lost money. What that red column indicates is that I bought back an option. Okay, so I'm going to break down the columns here. We're going to talk about them briefly, but that red column right there, that column is usually zero, meaning when I start the trade, it's zero. And when I'm going to buy back an option, right? Say I got $3 for an option, the stock falls, and now the option's trading for 10 cents. I'll plug in 10 cents in that red column, and it'll tell me my profit if I bought it back for 10 cents. So if that column is red, that means I bought back the option. Does not mean I lost money. And as you can see, right off the bat, February 28th, I mean, this is literally a week before the pandemic, I go ahead and do a cash secure put on a TQ. The TQs is a 3X leveraged ETF. I had a June 19th cash secure put. They paid me $13 for this. Okay, so here's the setup. February 28th is when I place the trade. It's a cash secure put. The company is TQs, or the ETF is TQ. The ticker symbol, it's a cash secure put, so I don't put where the stock was trading, but the expiration was June 19th, $70 strike, okay? I did one contract and I got paid $13 for that, okay? So now as TQs is trading and it's moving, what ends up happening is that premium falls. Remember, they paid me $13, right? They paid me $13. Now, as the option is trading, this premium has fallen to $7.70. So now, with my $13 in hand, I decide to give back $7.70 to alleviate the obligation. Right? My cash comes back into my account. I keep the difference between what they paid me, $13, and what I paid, $7.70. That trade netted me $528 right off the bat. That's trade number one in March. Now we're feeling pretty good. I on March 2nd, I sold a covered call on some shares I had of 3M. So when the stock was trading at 152X, I sold the April 3rd expiration, the 162.50 strike, 3 contracts. I got paid $2.55 for that. The stock fell, and look what I ended up doing. Are you starting to get this now? I got paid $2.55. I bought it back for $1.06. I keep the difference. So I ended up pocketing $445 on that. We're already up over $900, and we are having the worst stock market crash in modern history. Now, February 11th, I went ahead and bought some AbbVie shares. Okay, as you can see, February 11th, I bought them. And I do remember writing a covered call. I ended up buying that back. The stock tailed a little bit. And to be honest with you, I was never able to use it again. I decided to sell it, make some cash free for some cash secure puts I ended up doing later. I ended up selling AbbVie for $88. You can see it right there, $88. I paid $88.90. I bought it back for $88, ended up losing $180 on that trade. Again, this is all in March, okay? What you're seeing here are what I closed in March, okay? March 3rd, I did a cash secure put using TQs. I used the March 6th expiration. This is a 3-day expiration. I sell the 80 strike on one contract, and clearly I'm swing trading the cash secure put because we have so much volatility in the stock market. I end up getting $5.50 for that, and sure enough, I ended up buying it back. It was a directional trade in the stock market using the TQs. And sure enough, I buy it back for $1.10. I keep the difference. We make $438. We are absolutely ringing the register in the most volatile month of this year. Now, March 4th, I own some TQs at this point. Okay, I decide to write a covered call. So when the stock is trading at $82.97, I go ahead and sell the April 3rd 83 strike. I get $9 for it. Turns out the stock is falling, right? I mean, this is the month of stocks falling. Buy that option back, $2.85, pocketing the difference. We bag another $613. Man, this is fast and furious. We have Roku. Now, if you remember, I was trading Roku quite a bit. February 14th, I went ahead and did a cash secure put on Roku, did the 130 strike, got paid $11. This thing fell off the table, and I was not going to own Roku shares at $130. I think at this point in the game, Roku is literally trading for less than $100. I think I did a video on it where I said, no way. If I assume those shares, I end up down greater than me buying this option back. So notice what I did. I was paid $11 for this cash secure put. I ended up alleviating the obligation, paying back $33.75. So I end up taking a hella hit here. So all those nice little gains I made in the beginning of the year, well, they're just getting eroded with this $2,276 loss. And by the way, that's a cash secure put, so that is a real loss on the books, right? I don't own the shares. I took the loss. I was not going to be assigned Roku shares. Now, fast forward some 8-9 months, I should have with it trading at 400, but that was then, this is now. I had Southern Company, and I actually think this trade was done in early January. I went ahead and did a very long call. Southern is a part of my buy and hold dividend capture portfolio. So for me, I think I was just playing the fact that Southern was at an all-time high. I was going to write a covered call, out of the money covered call, and never really expect to have my shares taken away. And sure enough, Southern peels back. I end up getting $1.95 for that. Actually, it looks like I bought it back for $1.90. Didn't make much on that. Turns out I collected a dividend along the way. I ended up making some money. I ended up keeping the shares. As you can see, I got paid $1.95 in premium for this covered call. I went ahead and bought that back for $1.90. I had kept the shares through the X date. Okay, that's where that $648 comes from. Let's look at this. We get Roku again, another cash secure put. You can see Roku has fallen to 120. I got $6.25 for that. It went to expiration. I was assigned the shares, so we bag that $623. We end up doing another covered call on my 3M shares, got $2.95. I bought it back for 30 cents. We pocket $793. We did a cash secure put on 3M. I was feeling really good with 3M. As you can see, I got paid $10. I went ahead and bought that back for more money. Did not want to be assigned the shares. Ended up taking a true loss there. Back on March 12th, I went ahead and did a cash secure put on Goldman Sachs, a 160 cash secure put, got $17 as the stock was trading sideways to nowhere. Ended up buying that back for $7.60, bagging $938. Looks like I did I bought a put on Facebook. You know, I'm going to actually have to go back and really investigate what I was doing here. I think this put was a part of my covered call for which I bought some shares. I wrote a covered call and I bought a put for a married put. If you remember, I did a video on that where I bought some shares. I went ahead and used this put as a married put with my selling premium covered call. Ended up taking a loss on the married put, but I ended up making money on the covered call and the shares. Then, of course, I finished the month with a cash secure put on Goldman Sachs. This date here must be a January 15th, 2021, because there's no way I can do a cash secure put on March 9th and backdate it to January 15th of 2020. So clearly what I did here was I sold a cash secure put out some 9 and 10 months. Ended up getting $16 for that. Turns out, to alleviate the obligation, I bought it back for $20.20, losing $421. When you add all of this up, you take the profits minus the losses, every trade is closed. I end up making $1,549 in the worst month in modern history of the stock market. Selling premium. If you want to be a part of something special, go back, check out the 1 free month offer. Man, I'm telling you what, being a part of a like-minded community is awesome. You get opportunities to see what I'm watching. I grade your trades if you send them to me. And to be honest with you, I send emails out about every single day, and people love it. People love it. They want to see what a cat like me is trading. And I'll tell you, man, they give me great ideas, and I share them with you. So go over to my website. You know what to do. I give you 1 free month offer. Take advantage of it. Make 2021 the year you get off the bench, get in the game, and have your own success. Hey, look, I'm going to leave it right there. If you like what you heard today, I want you to subscribe to the channel. Bang that like button. And until next video, be safe, be healthy. Most important, be lucky. Until next time, may all your covered calls be profitable.